Welcome once again to the Customs GST Advisory channel of customsgst.com. In this video, we are taking up the issue affecting large business entity. Let's begin. Imagine waking up on a Monday morning and opening your email. You expect a customer order, a payment confirmation, or a supplier update. Instead, you see a GST notice. The notice says there is a discrepancy between GSTR2B and GSTR3B. No officer has visited your premises. No one has checked your invoices. No one has examined whether the goods were actually received. Yet the system has already marked your return for action. For many businesses, this is no longer an exception. It has become a monthly fear. The real question is not whether mismatches should be examined. The real question is whether a portal-generated mismatch is slowly being treated as a presumed default. Let us first understand the current problem in simple language. Your supplier uploads invoices in GSTR1. Those invoices appear in your GSTR2A and later in GSTR2B. You file GSTR3B and claim input tax credit. Now the GST system compares these two numbers. If GSTR2B shows less credit than what you claimed in GSTR3B, the system may generate a notice. On paper, this sounds reasonable, but business transactions do not happen inside a spreadsheet. Suppliers may file late, invoices may be amended. Credit notes may be issued later, imports may reflect with delay. Sometimes the difference is temporary, not fraudulent. A mismatch is a signal that something needs verification. It is not proof that tax has been wrongly claimed. Assume you are a manufacturer in Pune. You purchase raw material on 28th July. The truck arrives, you receive the goods. You enter the invoice in your books, you pay the supplier. You claim input tax credit in July, but your supplier uploads that invoice in August. When the system checks July, your GSTR3B is higher than your GSTR2B. The portal sees a difference. But ask yourself, were the goods received? Yes. Was there a valid tax invoice? Yes. Was payment made? Yes. Is this the same as a fake invoice? No, this is the heart of the controversy. The portal compares timing, the law examines entitlement. What happens after the mismatch? First, an automated intimation may arrive. Then a show cause notice, then a detailed reply. Then a personal hearing, then an adjudication order. Then an appeal, sometimes a second appeal. And in serious procedural cases, even a writ petition before the High Court. Think about the cost. Professional fees, time spent collecting documents. Management distraction, blocked working capital. Stress on the business owner. The tragedy is that many disputes are not about hidden transactions. They are about reconciliation. Now we reach the deeper issue. In a traditional tax assessment, the department first examines evidence and then forms a conclusion. In a technology-driven environment, the sequence can sometimes feel reversed. The system identifies a discrepancy. The taxpayer receives a notice. The taxpayer must explain. The taxpayer must produce documents. The taxpayer must reconcile supplier data. Gradually, the burden appears to shift from proving default to disproving suspicion. This is why many professionals are discussing questions of natural justice and proportionality. Technology is essential, data analytics is useful. Fraud must be detected, but automation cannot replace legal verification. A spreadsheet cannot decide whether a statutory right exists. Only a proper adjudicatory process can do that. The moment you receive a DRC01A, do not panic and do not make an immediate payment merely because the portal shows a difference. First, remember that DRC01A is generally an intimation before issuance of a formal show cause notice. Your objective is not to write a long emotional letter. Your objective is to demonstrate that the discrepancy has been examined invoice by invoice. Begin your reply with a short factual statement. Mention the tax period, the amount involved, and that a detailed reconciliation has been carried out. Then divide the difference into clear categories. Invoices reflected in subsequent periods, amended invoices, import IGST credits, reverse charge credits, supplier filing delays, and any amount, if at all, accepted by the taxpayer. Attach a reconciliation statement as Annexure A. Attach supporting documents as Annexure B onwards. Most importantly, avoid a one-line reply such as reconciled and found correct. A structured reply creates credibility. A vague reply creates suspicion. This is the method that actually works in practice. Export the mismatch report from the portal. Open a spreadsheet. Create columns for supplier GSTIN, invoice number, invoice date, taxable value, GST amount, GSTR2B status, GSTR3B claim, reason for difference, and supporting document reference. Now examine every invoice. Do not work only with totals. Suppose the total difference is 10 lakh rupees. You may discover that 6 lakh relates to invoices reflected in the next month, 2 lakh relates to imports, 1 lakh relates to amendments, and only 1 lakh requires further verification. This changes the entire dispute. Officers often receive summary differences. Your job is to convert a summary allegation into a documented invoice-wise explanation. Once the dispute is broken into individual invoices, many apparent mismatches become explainable business events rather than unexplained tax credit. In GST litigation, arguments are important, but documents are decisive. Many taxpayers spend hours writing legal submissions while their evidence remains incomplete. The strongest combination is this: a valid tax invoice, proof of receipt of goods or services, proof of payment, ledger entries matching the invoice, and a reconciliation linking everything together. For goods, transport documents, e-way bills, goods receipt notes, weighment slips, and stock records can become extremely valuable. For services, agreements, work completion records, emails, timesheets, and payment records matter. Prepare a single indexed PDF. Give page numbers, mention those page numbers in your reply. When an officer or appellate authority can move directly from allegation to evidence, your chances improve dramatically. Good documentation does not guarantee victory, but poor documentation often guarantees difficulty. This is one of the most misunderstood areas. If the officer has passed an order after considering your reply, even if the conclusion is wrong, the normal remedy is usually an appeal. Appeal is meant for errors of fact, errors of law, wrong appreciation of evidence, or incorrect interpretation of GST provisions. A writ petition is different. High courts generally do not act as routine appellate authorities. Writ jurisdiction is invoked when there is a serious procedural or constitutional problem. For example, no opportunity of hearing, documents ignored completely, order passed without reasons, action beyond jurisdiction, violation of natural justice, or challenge to the validity of a provision or systemic action. Ask yourself 2 questions. Is my grievance that the decision is wrong, or is my grievance that the process itself was unfair or illegal? Wrong decision usually points toward appeal, unfair process may justify writ. Choosing the correct remedy can save both time and cost. Let us end with the most important message: a portal mismatch is not a conviction. A difference in GSTR2B and GSTR3B is not automatically a fake invoice. The law still requires verification evidence and a fair adjudicatory process. As taxpayers, our responsibility is to maintain proper records, reconcile carefully, and respond professionally. As a tax administration, the responsibility is to ensure that technology assists justice rather than replacing it. If this video helped you understand the real story behind GST mismatch notices, subscribe to Customs GST Advisory. Thank you for watching. Share this video with your accountant, finance team, and business associates, because the difference between portal data and legal entitlement is the difference between unnecessary litigation and informed compliance.